Welcome to this webinar. It's the first of a series of webisodes that will be organized by Normec Verifavia together with NAVIS on CBAM compliance. We'll dive into details regarding the compliance. This first episode will set the general context and highlight some of the key challenges that have been faced by proactive compliant organizations. And the next series we will continue and dive into further details when it comes to technical challenges regarding methodologies to use to comply, default methods which are accepted or not, and so on. Thank you all for joining. We'll give it a start then. So welcome to this first series of webinar by Normec Verifavia and NAVIS on CBAM compliance. This webinar will be dedicated to giving the context for CBAM, highlighting some of the key requirements, and highlighting some key mistakes which we have noticed have been committed quite often at this stage. It's a new regulation with new requirements, and so there is a need to adapt, and we are here to support you in your compliance journey. Welcome again to this webinar. Your presenters today will be myself, Nicolas Duchesne. I'm President and CEO of Normec Verifavia. We will also have Patricia Pinilla, who is our Sustainability Director, together with Davide Palombo from NAVIS, Managing Director, and Harry Horner from Carbon Advisor at NAVIS. So I've been working on independent verification for carbon emission for more than 10 years, initially for transport industry, but also now for industrial sectors. Verifavia is accredited by multiple accreditation bodies worldwide, and we are keen on capitalizing on our verification experience to apply it to CBAM. I'll ask maybe Patricia to say a few words about yourself.
Hi, thank you, Nicola. Thank you, everyone, for joining us on this webinar. I'm Patricia, so I am the Sustainability Initiative Business Unit Director. I've been working in Verifavia since 2 years ago, and my background is environmental engineer. I've been working with different companies, verifying their emissions on their regulatory schemes and also voluntary carbon markets. And yeah, I'm happy to join you today in this webinar.
Thank you, Patricia. Davide, do you want to say a few words about yourself before we dive into the topic?
Mute. It's a classic.
Yes, thank you very much for joining this webinar. As anticipated by Nicola, it's aimed at companies that need to comply with CBAM. And it's good to see that there are attendees from all over the world, because the CBAM regulation, even though it's a European regulation, it's affecting also manufacturers and producers. NAVIS is a company specialized in compliance with environmental regulations in Europe. F-gas was the first one, and now we are expanding our expertise and services to CBAM. Now I'll leave it to Harry, who is the real head when it comes to CBAM in NAVIS.
Thank you, Davide. So my name is Harry Horner, and I've been working in carbon markets for the last decade or so, forecasting the European markets, North American cap and trade markets, and then other clean fuel and voluntary markets around the world. Unfortunately, I'm probably the bringer of the worst news, because some of the other guys on this webinar will be talking about the current problems that are facing you all through CBAM, and I'm here to say that the headaches will only grow in the longer future. Where I look at in the price forecasting of these markets, that's where I'll be covering, and that's what I'll be explaining about. So I'm sorry for my role, but yeah, it only gets more complex.
But no worries, because you have experts to guide you on this process on how to make this compliance as efficient as possible, recognizing that this will not go away and it will probably only get more and more difficult. So it's worth paying attention to it right now to fully understand the full picture in terms of technical aspects, but also financial aspects.
There's the message of hope that we need.
Thank you very much for the quick introductions, everyone. And we'll cover during this webinar the context for CBAM, where is it coming from, a quick comparison with EU ETS, as some of you may be familiar with EU ETS, which has been around for a very long time. And then we'll discuss some more details about CBAM, including compliance timeline, what challenges have been identified in terms of reporting, what will happen in case of non-compliance, and wrap up. I would like to inform you that we'll give you the presentation after this webinar, and we also strongly encourage you to use the chat to ask any questions that you may have, and we'll do our best to pick up the questions directly during the presentation so that we can have as interactive session as possible. So don't hesitate to use the chat to fire out any questions that you may have. Just a quick intro about Normec Verifavia. We have been working more than 10 years in carbon auditing and decarbonization. We work with airlines, airports, shipping companies, but also we work in the industrial sector. We have accreditation under ISO 17029 from COFRAC in France, from UCAS in the UK, and also from Singapore. What may be coming into the picture in the next few months or years is a UK application of CBAM. So we'll keep also an eye on that. And with UCAS accreditation of Normec Verifavia, we'll be able to provide you with the associated independent verification. Just quickly, in terms of the context where CBAM is coming from, so it's coming from this Fit for 55 package, so the latest EU strategy to fight climate change with some ambitious objective in terms of carbon neutrality by 2050 and reduction in GHG emissions of at least 55% by the year 2030 compared to 1990 levels. And Fit for 55 has a CBAM component which addresses emissions associated with the import of materials and products produced outside of EU and imported into EU. So it's coming in addition to EU ETS, potential extensions of ETS, and it has also a social aspect with the objective of financing the fight against poverty and through the Social Climate Fund, which is implemented as part of this Fit for 55. And now about CBAM. So which sectors are covered by CBAM? The EU targeted the most highly emitting sectors, which are subject to imports from outside EU, and they have identified these sectors as being the cement industry, iron and steel, as well as aluminium, fertilizers, electricity, and hydrogen. So if you are importing simple goods from this category, and manufacturing some products out of those, then you're definitely subject to CBAM. One of the important elements, maybe anticipating on the next items, is that the CBAM will be governed by custom authority, and some of you have probably received already some requests to register as a CBAM declarants from custom authorities. If you have not received this notification, it doesn't mean that you are not under CBAM scope. You have to be proactive. You have to identify whether you are subject to CBAM or not. And if you are subject to CBAM, it's really important that you declare yourself so you get access to the portals which must be used for declarations. In terms of comparison with EU ETS, there are some differences, obviously, and because some of you may be familiar with EU ETS, we thought it was useful to conduct a quick comparison, so you understand what are also the differences between the two systems. So EU ETS is a cap and trade system. It's based on polluter pays principle, and if you emit X ton of CO2, then you have to purchase and surrender X tons of corresponding allowances that you buy on the EU carbon market. So the idea is to have a maximum number of emissions per year which cannot be exceeded, and to encourage investment in technologies which will reduce the number of tons of CO2 emitted, so that there is less need to buy quotas. It covers many industrial sectors within EU, but it applies to EU-based installations only, be it energy production or cement production or whichever production relies on high energy consumption. It's based on allowance mechanism, so you estimate how many emissions you produced, you get those verified, and then for each ton of CO2 verified, you must buy an allowance and give this allowance back to the authority. And as I've said, the principle is to encourage investment in carbon reduction technologies, and for that, the price of carbon has to be rather high, which is the case currently, and Harry will go through that in a bit more details later. On the contrary, CBAM is a certificate-based system, so depending on the quantity of emissions embedded in your imports, you will have to buy one certificate for every ton of CO2 embedded. The price will be aligned, and we expect that CBAM certificate will be priced in accordance with EU ETS allowances. It focuses on key sectors where carbon leakage has been estimated as a high risk by the EU, and it applies to goods which are imported from outside EU only. So custom authority will be the authorities that have an important role to play when it comes to CBAM compliance. One of the specificities of CBAM is that it introduces requirements for non-EU installations, and in order to comply with your CBAM requirements as an EU-based importer, you need accurate information regarding the emissions embedded in the product or in the materials that you import. So there has to be some increased awareness and level playing field so that all installations based outside of EU which export to EU recognize this requirement and implement the right methodology in terms of monitoring, reporting their embedded emissions. And the EU is quite prescriptive when it comes to CBAM approved methodology, as Patricia will show you in a couple of slides. And default methodologies are accepted until this month. There is a deadline, end of July, to report emissions from second quarter of 2024. It's the last deadline by which you are allowed to use fully default methodologies when it comes to declaring your CBAM emissions. So this is quite important and and one of the important area of challenge, this embedded emissions information from non-EU installations. I will now pass the floor to Patricia. Patricia will tell you a bit more on the timeline for CBAM when it comes to the implementation phase, or the testing phase in which we are, and also the definitive phase, as well as some details on the methodologies which are applicable before we move on to practical implementation aspects with NAVIS. So Patricia, over to you.
Yes, thank you. So can we go to the next slide, please? I'm not sure if I can control it. Oh, thank you. So just to give a bit of a background, the adoption of the CBAM regulation was in May of 2023. And next, it was the implementing act relating to the transitional phase, which is in the one we are now. In December of 2023, there was the opening of the CBAM registry where all the declarants can go and report their emissions. Then the first, let's say, deadline will be January 2021 to report the first quarterly declaration for the last quarter of 2023. For this same year, in April, a second quarterly declaration for the first quarter of the current year, and in July of 2023, a deadline for the second quarter of 2024, and so on. So it's important to remember, as Nicola said, that default values will be accepted only for the second quarter of 2024, and they will be accepted only up to 20% and only for complex goods. The next step or the next change in the transitional phase is that starting from January 1st of 2025, only the EU method will be accepted, which is the most precise method. And then this transitional phase will end in January of 2026 with the definitive implementation of the CBAM credits, which I will be explaining a bit more about the definitive phase. Can we go to the next slide, please? Yes. So in the definitive phase, we will have the CBAM certificate system implemented, which EU importers must register, purchase, and surrender certificates based on the embedded emissions. This will mean also a gradual introduction of CBAM alongside the phase out of EU ETS free allowances. They will no longer be, there will be less and less free allowances allocated to EU ETS installations. And with potential, there will be a potential expansion of more sectors in the CBAM, which I guess this is what Harry was saying in the beginning, that it will be more and more difficult. So the annual, let's say, and then another change in the definitive phase, a very, very specific, is that there will be verification or mandatory to the declarants. So starting in 2027, they will have to report all their emissions of 2026 verified, and the deadline will be May 31st. There will be a substantial financial impact because there will be, a price to pay to the certificates, and this price will be based on EU ETS allowance auctions. And there will be a certain deduction that will be permitted if there has been already a carbon cost paid during production. We can go to the next slide. So, as Nicola said, some reporting methods that were initially published, but they will be no longer accepted based on the timeline. So the first method will be the reporting based on default reference values, which is the one that most of the declarants are basing right now, because the communication is difficult with sometimes may be difficult with the installations outside the EU, and the data is not available. So the EU Commission has given some flexibility to use reporting to use default values until this month. Actually, these reference values were published by the EU. And they are standardized estimations of emissions based on typical production methods and energy used. Then we pass to the second reporting method, which is accepting other methodologies outside the EU, which can be similar to the ones accepted by the Commission. This means that they are accepting still reporting based on other ETS of other countries, and they're still giving this flexibility until January 2025. The second and the third method will be the detailed method, which is from actual activity data measured on site or measured continuously. So this method will be, let's say, the most precise, the most accurate and transparent. And this is the one that will be accepted starting from next year, the beginning of next year. Yeah. So that's on my side. I think the next step will be from NAVIS side.
Yeah, thank you, Patricia. And now we'll hand over to Davide.
Okay. This time I remember to unmute myself. So I hope you can hear me. Can you move to the next slide, please? Okay. We have been working with clients, and we have identified a kind of a pattern which is quite tricky when it comes to CBAM regulation. As anticipated by Nicola, companies that are importing products which are in scope of the regulation have been receiving notification from the customs to register on the CBAM portal and start doing the reporting. However, in the industry, there is a trend which is to kind of group the customs clearance under parts of the main unit that the company is dealing with. For example, HVAC products, they tend to put screws, washers, bolts, and so forth as part of air conditioning, and therefore they fly below the radar of the CBAM regulation, while in reality they should be in scope. The key point here is that it's important to make sure that you are using the correct customs classification when you are placing on the market whichever product you are bringing in. What you consider a part of a piece of equipment might actually be an item which is in scope of the CBAM. So this is the first trend that we have seen in many of our clients, and we are working with them to rectify it. Another key point is which date is relevant to identify under which quarter the import must be placed in the reporting tool. And that is clearly the customs clearance date, which is the date when the goods are released for free circulation in the market. And most of the companies and most of the clients that we're working with, they work with the good receipt date, which is somehow different from the customs clearance date. Products may arrive on the 25th of December, Christmas, and be customs cleared on that day, but good received on the 1st of January. And that makes the difference because it moves from one quarter to another in terms of reporting. So this is also important to look into because not everybody is aware that the customs clearance date must be kept in consideration when you're doing the reporting. And another key point is the country of origin. In many cases, there is a vendor which is outside of the European Union. And this vendor is somehow purchasing parts and components from everywhere in the world and is shipping them under one umbrella. So it's consolidating the shipments to Europe. It's very important to understand that the vendor does not necessarily is the manufacturer. And the CBAM regulation wants to know the manufacturer information, not the vendor information, unless they coincide. So these are the three major points that we have seen when it comes to approaching the CBAM regulation. Companies that are in scope don't know that they are because they are incorrectly classifying what they are bringing in the market. When they are aware, not always they use the correct date to cluster the reporting in the correct quarters. And sometimes, well, quite more often than sometimes, there is the lack of clear information about who the actual manufacturer is. And this is one of the key problems that they face, because when they engage with the vendor to try to go to the next level, sometimes they get not the correct response because the vendor is a little bit hesitant in disclosing the information about the vendors that they're using. So under this point of view, it's important to look into these three major items. And as you can see in green, there is a question. What is it? you see it's a screw, but it can be a part of an air conditioning, it can be a part of a piece of furniture, but in reality, it's a product which is in scope of CBAM, if it's made of iron, steel, or cast iron, and any item which is in scope of the regulation. Can you move to the next slide, please? We were talking about pitfalls, and there are penalties which are somehow drafted in the regulation. But the key point is the very last one that you see on this slide, because a company that is not registered on the CBAM registry and it is importing products which are in scope of the regulation may see their cargo being stopped at the customs because there is a block in the system, and it's checking whether the company, which is identified by the EORI number, is registered or not on the registry. So this is the most critical part, because it might be the case that you have urgent items that you need to bring in for a repair, for maintenance, and you won't be allowed to because they were not correctly treated before the full implementation of the CBAM regulation. As usual, if you have questions, please pop them in and we will be more than happy to follow them up. We can move to the next slide. And this is where I more or less hand over to Harry, who is the most knowledgeable guy from the practical and theoretical point of view, because he has been dealing with the reporting of some of our clients. So Harry, I'll leave you to lead this part of the presentation.
Thank you, Davide. So I first wanted to, for those that haven't already submitted and seen the portal and the process, I wanted to give a few brief screenshots to point at some of the difficulties, some of the obstacles, and some of the simple solutions that can overcome these bugs, and some of the more complex ones regarding the data. So the first and most interesting one is that this is the link that's required to access the portal, but it's rather counterintuitive that rather than selecting CBAM, which would be the first logical solution, you have to select customs in the drop down. And this is just one.
To the next slide.
You go to the next slide. So, I mean, this is just a small example of the kind of strange blocks and obstacles that have held up clients of ours for, before they've come to us for weeks in trying to work out how to get access to the portal, how to submit their data. And then there's these strange kind of roadblocks that just come from the implementation of the system. So if you go to the next slide, you're able then, if you're eventually able to fill in the different complexity of data, you then have to do a member state digital identification. And one of the great difficulties is that you have to have the same, you have to be of the same member state as to where your company is headquartered as well. So that can provide some trickiness around if you've asked an agent or if you've asked someone else to put through your portal or to work on your case. That also, puts through some speed bumps. So when you've been able to classify yourself in relation to the legal entity of your company, if you then progress to the next slide, you're then able to enter the Nicholas, next slide, please. You're then able to enter the portal, which looks something like this. So this is a completed report for the first quarter of this year, submitted and taken through with the various rows on the left. And there are very many different levels or hierarchies within the report. So you first have to get the very detailed set of information from each supplier that you work with. And then you need another level of granularity, which is the detailed facility level information. And again, you have to remember that you will be in breach of CBAM if you're getting vendor level data, but not the manufacturer level data. And where those two entities are different, you're then getting to a case of what perhaps Chinese whispers, one set of information need to pulled up into the vendor from the manufacturer, and then that being passed across to you. And so, and you will be in breach if you're not following that process correctly. So there's one set of information that's presented here, and then when you set the vendors and you've set the facilities, you then have to group your consignments, your goods imported, by tariff code and by vendor, and that can lead to the input of tens or hundreds or thousands, depending on the scale of your business, of rows. And for each of those, you need to have the industrial processes, upcoming, as was discussed by Patricia. You need to have the industrial processes and the input values associated with each industrial process from each facility for each good. So, I won't comment on the ultimate wisdom or the practicality, of the wisdom of this regulation. It has its strengths and weaknesses, but certainly in the practical implementation, it throws up significant challenges and a real data set problem. We have solutions and ways of working on this that we've now developed in partnership with existing clients and my own experience within the carbon markets, but it's not something that I would seek to attempt without prior training or without such a solution. So if we go through to the next step, please. Next slide, please. So that's kind of the sort of practical implementation and some of the headaches thrown up on this side. The other upcoming headaches are not so much from the administrative or practical side, but from the financial side. You can see, so this is I've been building fundamental price models for carbon markets for 10 years now. These are the results of the base case of our EU ETS fundamental price forecast. And you can see we're currently, the price currently stands around 70 euros right now, 60, 70 euros. And we see that from a fundamental aspect rising to 120 euros by the end of the decade. Now, this is our base case. We have a case that goes above 140 euros, and other forecasters are in that realm as well. The important thing to remember here is that this is not, in a sense, of a common market. The ultimate supply of the market is fixed and capped out through 2 decades. And so in that respect, you can be a little bit more sure of the fundamentals of the market. The demand side, which is the demand for emissions within Europe, is variable and is market-based, but the supply side is fixed and capped. And so perhaps more so than forecasting normal commodities, we can have a greater degree of certainty that you only have a squeezed market on supply, so the price will more or less only be going upwards as a general trend. And so this is to sort of show a little bit of where we are right now, but where we will be, in 2026 and beyond, where we need to start buying equivalent credits that will be tagged to this price schedule. So if you go to the next slide, please. The other thing that we've seen within this market is really significant price volatility. And so you can see at the beginning of 2021, we were at a price level of around 30 euros. And already by, 13, 14 months after, we were near 100 euros. And then just between 2023 and where we stand in 2024, less than a year, we've fallen from about 105 euros was the market peak down to 67 euros. But the key point that I'm trying to get across here is that we will continue to see high levels of price volatility in this market, albeit in a general upward trend, because it's a well-traded market with a lot of investors and speculators, and so price swings are more responsive to emissions news in the market. What that means for you from 2026 onwards is that with high price volatility, you have the ability to save significant cost in compliance by timing and optimizing your buying strategy. Because this is not a fixed carbon taxed with a stepped value over years. This is a fluctuating market that will allow you to, if you're able to find bottoms in the market, say you were able to secure allowances at around about 55 euros, as opposed to the worst case in the most recent year, above 105 euros, it's more than double the compliance cost. So at NAVIS and, alongside our partners at Verifavia, we have several solutions for this. Firstly, we have the expertise in price forecasting. We work with the market leader in EU ETS price forecasting, and that will enable to give you a long-term projected costs of your compliance within this market. We also have the ability, because of that forecasting, to time the purchasing to optimize the strategy, because a CBAM credit has a shelf life of 2 years, which means that you can buy those credits up to 2 years in anticipation of your need to comply. And as we can see here, the difference in 2 years can be as great as 30 euros up to 100 euros. The other aspect that we will roll out is with our established network of brokers. We'll be able to provide hedging options, futures contracts that can secure the cost of your compliance right out to 2030 and beyond. There's an established futures market for this, and we can provide intelligent supported access to that. And that will mean that you're able to fix that cost of compliance if you have a rough understanding of what your emissions will be, and clearly we can solve that problem for you as well. That we can take this variability and this volatility in your budget, and we can fix that to a basis. And so this is a little bit in advance of the current problems, which are more administrative headache and data quality based, as Davide mentioned. But we need to keep one eye on 2026 and beyond, when it really starts to hit in the wallet. And thankfully, we have the opportunity, we have the solutions to be able to minimize your actual costs when it does come in that light. So I think those are the sort of major points that I wanted to make. The only other point that I wanted to add was that the motivations behind the EU starting CBAM, they have their outward stated motivations, and they have their inward real reasons why this occurred. The outward stated motion was to protect European industry by providing an equivalent carbon price around the world. That's the 4 inputs into the EU. So that's the stated reason. The real reason was that slightly less than half of the potential revenue that the EU could take through selling these allowances within Europe is being foregone because they're giving out free allowances to certain industries. Now, by instituting CBAM and making that equivalent carbon price on out of Europe countries, extra European companies, they're able to then start selling those allowances to their own in Europe compliance entities. And so they're bringing in upwards of 30 billion euros of revenue through the rest of this decade, and especially towards the later years as CBAM starts to bite in, and they're offering those free allowances. So it really comes down to that reason for why they instituted it. And the second point is that it's thrown up so many more carbon markets around the world. And these carbon markets now in regulation in India, for example, we've been involved in advising on that. The effective carbon price in those geographies will be taken out, will be negated or equated from the CBAM price. So this offers, this on the one side means that the revenue stays in those domestically in those nations. But on the other side, you've got another moving part to deal with, which is your own upcoming national compliance market that may be occurring in response to CBAM, and the carbon accounting needed to work out the per ton equivalents and the savings you can make within CBAM. So I also would advise you to keep an eye on that, and an eye on carbon regulations within your own country, because of CBAM and other programs upcoming like it, they will be coming to a place near you soon. Right, I'll leave it there.
Thank you very much, Harry and Davide, for the insightful discussions. Maybe, Harry, I can throw you the question from Oksana. I think you covered it during your talk, but Oksana is wondering about the expiration of CBAM credits, which they will be valid for a couple of years.
Yeah,
I think is what you said, but could
it's
you maybe
exactly.
elaborate a bit?
Sure, it's 2 years past the point of purchase. So the regulation is more intending that, and the other, so it's 2 years past the point of purchase. The EU ETS, the base market that this is tracking, has a limited supply, a fixed supply. But it's crucial to note that CBAM credits will be bought from the national regulators. They have an unlimited supply. So although they're tagged to the EU ETS price within a fixed supply market, the CBAM credit is limitless in what you can import and buy in. But yeah, it's a 2-year shelf life. That's the key factor there.
Thank you. So it's a key difference with EU ETS, where EU ETS allowances, they will be valid without time limit, but when it comes to CBAM certificates, it's only 2 years from period of purchase. So
exactly,
the strategy has to be thought accordingly.
But I want to emphasize that the hedging and the buying of EU ETSs through the futures contract, you are tagged absolutely precisely to the cost of the CBAM credit. And so you can have that effective hedge, even though it's fundamentally for a slightly different asset. The two assets are tied at the hip. And so it's a fully effective hedging strategy.
All right, we'll do a quick wrap up. Thank you for your attention and staying with us until the end. In terms of support, if you would like to go with some gap analysis or pre-verification, please contact Normec Verifavia. We'll help you to understand the requirements and evaluate what is your level of compliance. This verification is recommended during transition phase, and we strongly encourage it to avoid surprises at a later stage, which will become quite costly. And when it comes to the support that you can expect from NAVIS, as you've understood in terms of consulting when it comes to the default methodologies, what is acceptable or not, or actual reporting on the CBAM declarant portal, as well as the support consulting services associated to the evaluation of financial impact of CBAM and the purchase of CBAM credits, which will be required from late 2025. In terms of the next steps, we would like to invite you to our next webisode. So the date is not defined yet, but probably in the beginning of September. We'll contact you again. In the meantime, if you would be interested in some training related to CBAM, we'll be happy to hear from you and discuss further what type of training would be most suitable for you. Once again, thank you very much for your attention. Maybe we have a bit of time to tackle some of the questions. So there have been a lot of questions associated with the fact that the data is not available from your third-party suppliers, or the emission factors are not available. So from verification perspective, in this case, what we would suggest is to evaluate the impact of not being able to use the correct methodology and reporting with the best methodology available and the best data available. Because if data is not there, you cannot invent it. So the best thing you can do is use the most accurate methodology for which you have the data, report it, and explain to the authority why you could not why you could not be fully compliant. And every national authority in charge of CBAM compliance will have a role to play in terms of providing recommendation or accepting that this lack of data is a problem for everybody around Europe. And so they should accept some they should have some flexibility in these requirements. But as verifiers or NAVIS as consultant, it's not for us to decide. We can encourage you or describe you what we think is best to do, but then it will be up to the authority to make the final call. In terms of missing data or missing emission factors or carbon content, from perspective of verification, it would be acceptable to use some alternative sources of data, providing you can justify it. So by looking into scientific research or some specific databases, maybe information can be found, and then it can be justified in the report.
If I may add to what Nicola is saying, because I can see that there are some questions about the quality of the data. What if the supplier is not able to provide? The only suggestion that I can give is always be transparent with the local authority. That basically means that each European member state has a dedicated email for CBAM. What we advise you is to immediately engage with the local authority and say, look, this is the level of information that I am getting. And please consider that I can only report on what I've been told. I cannot, as Nicola was saying, be very creative under this point of view. I can only do some research online and expect the cooperation of the vendors. But this is a work that you need to start internally, because you really need to start having meetings with your vendors to make them understand what CBAM means, not only for you, but also for them. Because if you don't get the correct information, you may be forced to use a calculation method which are giving you a very high output in terms of carbon credits that are required for your business, and therefore even your capacity to do business with that vendor is affected. So it's in their interest to engage actively in the conversation about the CBAM. And this is something that we have already been doing with some of our clients. We are engaging with their vendors, and we're trying to make them understand what the CBAM is. But that's just a suggestion from our side.
From perspective of verifiers, if you can demonstrate the effort that you made to collect this data, and at the end you were not able to, and you cannot be blamed, so then you use the next best methodology depending on the data you have. Yes, please, Harry.
Yeah, I mean, it's then coming to the point where you're assessing the vendors that you use in response to how they understand CBAM and how they are compliant with CBAM. So clearly vendors that make your life easier and also make your goods cheaper from a carbon aspect in intensive production are the ones that you'll increasingly work with. So there is that, there is that change. We've been happy to do education sessions on behalf of our clients with vendors in order to bring them up to speed of what they need to get to. I've seen some other further questions on the chat, so I was just going to speak through a few answers to those. One from Des Franklin says, I appreciate the CBAM relevance to EU. How will it affect Great Britain or UK? So currently, the UK has a separate but well-aligned carbon market. Its prices are trading at a slight discount to the EU. And so the situation would be that exports from the UK to the EU, they would be charged, they need to buy the same CBAM credits, but they then receive a refund. They would then receive a refund in line with the price of the UK market at that time. So it's important to note you first have to buy the full credit and then you can get the refund back. That's an important funding aspect. The slight extension I would add is that the EU and the UK market, they were together previously pre-Brexit, and given the Labour policies towards the environment and synchronization with Europe, I personally believe that those two markets may come to coalesce and co-align probably by 2027. So soon after the implementation of CBAM.
And Harry, on this topic, maybe you have some more information than me, but I've heard some rumors that there would be in the future UK implementation of CBAM in the same way that when it comes to F-gas, there is the EU F-gas compliance, and then there is also the UK F-gas requirement.
Yeah.
So have you also heard these rumors about UK CBAM being implemented?
It's not just a rumor, it was a regulatory white paper that came out, and it's being formalized in that sense. But more or less, the UK has followed in step with EU carbon regulations in the carbon market. But I strongly recommend. I was in a room with UK market regulators and had dinner with them, and to as much as they could say, there is a strong intention to return to the EU market if permitted from a political aspect by them, and that it makes good sense to be within that market for them because of the price volatility they see in the UK market. Mm-hmm. The other things I would add is that Canada also released information over an effective CBAM as well. There have been mootings from the US, and so this carbon equivalence or carbon tariffs in a sense, or carbon equivalence is probably a better way of putting it. It's a global movement. Other developed nations that are seeking to put carbon markets and carbon prices on their own industries recognize that they don't want to lose those industries to nations where carbon prices are not in place. And so this is only going to increase. There are only going to be other CBAMs around the world that are effectively competing, and domestic markets will spring up in response, which is what we've seen in India. We've been advising them there. It's what we've seen throughout East Asia, a lot of movement on that side. And so, this will only swell and grow as a topic. Just some other questions I've seen from Sarah Al-Abari. Do I have to pay for all the tons I've produced, or just if I exceed a certain limit? So you only have to, yes, you have to pay for all the intrinsic emissions, all the direct and indirect emissions from any good that you import into the EU. There's no limit or efficiency. It's all of the embedded and energy emissions that have gone into the production of that good. Just to be totally clear on that. And it's not the it's not the supplier or the manufacturer that's paying this. It's the EU importing company. So you won't have produced the emissions, but you are liable for them. Another question is why doesn't CBAM take transport-related emissions into account? This is a great question. The EU ETS carbon market, the domestic market, has its second version, the EU ETS 2, emerging in Europe now, which covers transport and buildings within Europe. Those are the two big sectors. And it's actually will be a bigger market than the current EU ETS 1. So it's feasible that when European transport emissions are also falling under a carbon price, it's feasible that transport may come to be included within CBAM. Now, there's no scope for that now, and it would add an even greater level of complexity and headaches. But it's not impossible that in the future that wouldn't occur when EU goods moving within Europe are also falling under a carbon price for their transportation.
Maybe I can elaborate a bit on that point. And in terms of transport, shipping emissions, they are being included in the EU ETS currently. Also, emission from aviation, although it may not be very often in the context of CBAM that goods are delivered by aircraft. But as you mentioned, Harry, in terms of road transport, it will probably be included in the EU ETS in the next phase. Meaning the transport emissions are covered already somehow, although partially at the day of today by the EU ETS, and the complexity associated to the inclusion of that in CBAM, with all questions associated to the estimation of emissions and so on, would probably be not worth it, because if you compare to the production emission associated to the goods under CBAM, the transport part would be very small. So I guess there was a judgment call at some point that, okay, this is pretty small contribution, we'll have some headaches and administrative burden, and it's also already covered in EU ETS for shipping and into the future road. So I think that's why it has been indeed left aside.
I wanted just, if we've got time, there was one other question that I would like to provide the positive view of, and I'd probably ask Davide to provide the realistic view of. So it's a question around what will CBAM reporting and compliance look like in 5 years, let's say in 2030? Will we still be sending Excel files to each other as currently occurring now? So I will provide the rose-tinted EU regulation view, and I'll ask Davide to provide the real one. So the rose-tinted EU regulation view is that, firstly, manufacturers around the world will institute carbon emission reporting technology and techniques, and will have a live digital model of the carbon emissions that are coming out from their factory and all their processes. That data will be centralized in some sort of national registry. And you also have domestic carbon markets that have resulted from CBAM, meaning that the global knowledge or appreciation of carbon emissions reporting and carbon tracking becomes far more advanced. And so in the end, all of this supplier information will flow directly to EU companies, and they will have a full and transparent view of each step of the process and be able to comply with CBAM with no problems at all. Yes. So that's the regulator's dream cuckoo land. Now over to Davide for the real world.
Yes. So as Harry rightly said, most of the times the European regulators, and I do hope that there is somebody attending this webinar, they don't have any real experience in a working environment or in a manufacturing environment. So they are relying on the fact that the regulation is fully understood by the stakeholders and fully acted upon by the stakeholders. But these are the two big showstoppers, because clearly from the questions, there is some limitation in the understanding of the level of information that needs to be provided by the suppliers. If they are actually the manufacturer or not, and if they can get the correct information about who the manufacturer is. So in the real world, what needs to be done is engaging actively with your vendors to make them understand what the CBAM regulation actually is, what it entails for you in terms of administration and cost. And because we are in 2024, exchanging Excel files still works, but there are other tools like API or FTP file transfer and so forth. So starting to push the vendors, I'm calling them vendors because it's a question mark, there are also user or manufacturers, to start building up some local database and start sharing with you, would simplify a lot the administration work on both hands. They will have to provide the information regardless, and you will have to get it regardless. And as we were mentioning, engage with the local authority. We will then engage at European level. We will then engage at international level to push back to the shipping countries like China, Malaysia, Indonesia, India, and so forth, where the CBAM regulation is just a big question mark at this point in time. It will result in additional work at a later stage. But in the meantime, engaging with the vendors is the key thing today. And try to find a way to receive some information. It's important. And like any reporting tool, there is one basic rule. If the quality of the information that you put in is very low, the output is also low. You cannot expect that something magic happens in the system when you are processing the data. So engaging with vendors, try to get the correct information that you need. So manufacturer details, net weight of the product that you are importing, because that is the trigger of the calculation of the carbon emission that you are going to need. These pieces of information are already somewhere, because if you think about it, products are shipped and all the cargo and freight costs are based on weight and volumes. So this information must be somewhere. And working with this assumption, engaging with the shippers, engaging with the vendors can get you somewhere, hopefully in the short term, until something really happens. And people that are our legislators can somehow see their dream realized, that there is some perfect coordination between shipper and buyer, and the importer knows everything that needs to know and is compliant with the regulation.
So there's some hope in 5 years, but there's going to be a long and arduous road to get there, is what we're saying.
Yes,
but
definitely.
we can help. But but we can walk by your side and be a guide on that. So, yeah.
But the topic, in any case, is not going to go away for any industry, be it transport or be it production. And we'll continue to be there to provide you with our support. I think it's time to end this webinar. It's been a pleasure organizing it.
Yes. No,
thank you, Patricia, Davide, and Harry. Yeah.
If I may add one last comment, very last minute, it just dawned to me. As of today, it's non-mandatory to have an audit for your declarations. It's all voluntary. If I may, I would suggest to go for a voluntary audit. And why is that? Because you could have a reality check, and you could have a piece of paper issued by a certified body that you can actually use to engage with your vendors and say, look, I've been tested, and this is where I was found lacking. So it's very important that you start considering having some voluntary audit before it actually kicks in as mandatory, just to have some clear picture of how your house is, if it's in good order or if it needs some house cleaning. Sorry, Nicola, I'll give it back to you.
No, I mean, that's a good point. Of course, I can only fully support what you've mentioned. That would give you confidence. I mean, this pre-verification give you confidence that you are on the right track, and so it will avoid bad surprises at a later stage. Recognizing that currently the unavailability of data is making it a challenge. We'll provide you with the presentation. We'll also make the recording available. Thank you for staying with us until the end of the Q&A, and we wish you all a very good rest of the day. And don't hesitate to get in touch with regard to your CBAM questions and concerns. Thank you, everyone. Have a good rest of the day.
Thank you.
Bye-bye.
Bye-bye.